Hello and welcome to the e-module on procurement. Let's take a look at the learning objectives of this module. By the end of this module, you will be able to describe what is procurement, explain the difference between procurement and purchasing, discuss the difference between purchasing and buying, understand procurement management process, classify the types of procurement and discuss the procurement life cycle. Explain the competition and frauds related to procurement. Discuss the importance of vendor selection, cost and transparency maintenance. Describe the documentation required for purchasing and tender filling. Explain the request for proposals, that is RFP, and RFP process. Discuss vendor management. Describe the importance of reporting in purchasing. Discuss the impact of procurement on business. Let us begin with the introduction to procurement. Why it is important. Let's take a look. Many decisions taken by departments have a procurement implication that can impact on the overall cost of carrying out the decision. Here, cost includes the total cost of the good or service and not simply the price that is paid. In the private sector, procurement is viewed as a strategic function working to improve the organization's profitability. Procurement is seen as helping to streamline processes, reduce raw material prices and costs, and identifying better sources of supply. In a sense, helping to reduce the bottom line. Indeed, in many organizations, the importance of procurement is recognized by having their head of procurement placed at an executive board level. Within an institution, its expenditure is made up of two distinct elements: pay, that is salaries and wages, and non-pay, that is all other expenditure. Procurement is concerned with the management of a significant proportion of the non-pay expenditure and ensuring that the best possible value for money is obtained when committing this expenditure. Non-pay spend includes the day-to-day running costs of the institution as well as its capital expenditure. This expenditure can be further divided into that which is used to obtain goods and services from suppliers and other expenditure such as payments made to other educational establishments or to HM revenue and customs. The procurement function is concerned with obtaining the required goods and services from appropriate suppliers to enable the institution to meet its strategic objectives in an economic, efficient, and effective manner. Research has shown that within an institution, its non-pay expenditure is usually between 30 to 40% of its total expenditure. Now let us understand what is procurement. Procurement is the process of finding, agreeing terms, and acquiring goods, services, or works from an external source, often via a tendering or competitive bidding process. The process is used to ensure the buyer receives goods, services, or works at the best possible price when aspects such as quality, quantity, time, and location are compared. Almost all purchasing decisions include factors such as delivery and handling, marginal benefit, and price fluctuations. Procurement generally involves making buying decisions under conditions of scarcity. If good data is available, it is good practice to make use of economic analysis methods such as cost-benefit analysis or cost-utility analysis. An important distinction should be made between analysis without risk and those with risk. Where risk is involved, either in the costs or the benefits, the concept of best value should be employed. Procurement deals with the sourcing activities, negotiation, and strategic selection of goods and services that are usually of importance to an organization. Purchasing is the process of how goods and services are ordered. Buying is considered a general term, which is most commonly used to refer to everyday goods and commodities. However, purchasing is the terminology used for buying services or material for organizations. Procurement is the action of obtaining or procuring something, or it is the action or occupation of acquiring services, equipment, and supplies. The procurement process involves preparation and processing of a demand as well as the end receipt and approval of payment. It often involves purchase planning, standards determination, specification development, supply research and selection, value analysis, financing, price negotiation, making the purchase, supply contract administration, inventory control and stores, disposals, and other related functions. The process of procurement is often a company's strategy because the ability to purchase certain materials will determine if operations will continue. Procurement is an economic activity that seeks to allocate scarce funds among alternative uses. Organizational funds are scarce in the sense that every rupee spent on a good or service is a rupee that could have been spent on something else or not spent at all and invested in a bank account. Reckless input of funds to a procurement process without due consideration of outcomes would serve no positive end. The scarcity of funds, therefore, forces organizations to make sacrifices, economize, and seek best value for money in their procurement actions. All other things being equal, maximizing competition among potential vendors of goods and services should lead to downward pressures on costs and thereby yield the best value. Next, let's learn about the procurement management process. A procurement management process or procurement process is a method by which items are purchased from external suppliers. The procurement management process involves managing the ordering, receipt, review, and approval of items from suppliers. A procurement process also specifies how the supplier relationships will be managed to ensure a high level of service is received. This is a critical task in procurement management. In a sense, the procurement process helps you get what you have paid for. Now we will have a look at types of procurement. Procurement activities are often split into two distinct categories: direct spend and indirect spend. Direct spend refers to the production-related procurement that encompasses all items that are part of finished products, such as raw material, components, and parts. Direct procurement, which is the focus in supply chain management, directly affects the production process of manufacturing firms. In contrast, indirect procurement concerns non-production related acquisition, obtaining operating resources which a company purchases to enable its operations. Indirect procurement comprises a wide variety of goods and services, from standardized items like office supplies and machine lubricants to complex and costly products and services like heavy equipment, consulting services, and outsourcing services. Let us understand what is procurement life cycle. Most organizations think of their procurement process in terms of a life cycle. Some of the most common steps from the most popular frameworks include identification of need and requirements analysis, external macro level market analysis, cost analysis, supplier identification, non-disclosure agreement, NDA, supplier communication, negotiations and contracting, logistics and performance management, supplier management and liaison. Let us study how the competition is related to procurement. Internal auditors should be aware of circumstances in which competition related to procurement actions can be reduced severely or even eliminated. In the most obvious cases, a competitive market for specific goods or services may not exist, leaving no appropriate substitutes. When the price of a good or service is influenced or fixed outright by a monopoly or cartel, an organization must undertake procurement without meaningful scope for bringing competitive forces into play. Organizations are not only at the mercy of external conditions, however. Valid reasons may exist for management to diminish the role of competition voluntarily in some of their procurement actions. For example, organizations commonly standardize some aspects of their operations, such as computer hardware, for a defined period. The procurement of compatible equipment and services can achieve significant efficiencies that outweigh a reduction in competitive procurement bidding for all available brands. In addition, most organizations are required by law or public opinion to balance purely economic factors with sustainability considerations. Even without adopting full-fledged green procurement or ethical procurement activities, organizations can still face non-economic factors that limit competition. Let us have a look at the intensity of competition. Although competition is often diminished in procurement actions for both good and bad reasons, competitive procurement remains the best practice in the acquisition of goods and services. Organizations commonly establish cost thresholds that trigger intensity levels for individual transactions along three levels of competition: low, medium, and high. Low levels of competition tend to be reserved for small items of expenditure for which the costs of administering competition outweigh any benefits. When organizations undertake spot buying using petty cash, for example, the competitive element may consist of merely casting an eye over prices displayed on a store's shelves. With medium competitive intensity, a procuring organization normally seeks quotes from potential vendors. This category of procurement tends to be associated with small to medium acquisitions of goods and services. In a process sometimes referred to simply as shopping, an organization selects and obtains quotes from two or more potential vendors. The third and most intense category of procurement competition applies to major procurement actions, for which sealed bid tenders are common. An organization may solicit bids for a procurement action from either pre-selected potential vendors or on the basis of an open tender advertised in the media. When potential vendors submit sealed bids, the procuring organization typically holds them in a secure location until their formal opening and recording. In some instances, organizations undertake auctions for large procurement actions. However, auctions are relatively rare in organizational procurement, in part due to complicated logistical requirements. In practice, auctions tend to be used for homogeneous items such as commodities and time-critical items like perishable foods. Now we will understand how frauds can occur in competitive procurement and how to deal with it. Fraud may be interpreted as a subversion of the smooth economic functioning of procurement processes, especially their competitive elements. Examples of competition diminishing fraud include bidding rings among potential vendors to fix prices and collusion between potential vendors and employees of a procuring organization to favor specific vendors. To reduce the risks of anti-competitive fraud in procurement, an organization should treat all potential vendors on an arm's length and equal basis and receive and handle all vendor communications in a rigorous, confidential, and transparent manner. The internal auditor should look for any warning signs of fraud in correspondence between the organization and potential vendors. Auditors could also assess the appropriateness of accounts payable and disbursement procedures, the responsibilities for which should be segregated adequately from the procurement function. Let us understand why selection of vendors is important and procedure for vendor selection. The selection of potential vendors represents a crucial and sensitive part of the procurement process. Internal auditors should be aware of the risks arising from the exclusion of specific vendors through carelessness or intent, which can materially impact the outcome of procurement activities. Most organizations maintain a database, also called a roster or portfolio, of existing and potential vendors. Before including vendors in the database, a procurement function should screen vendors for their technical capabilities and financial stability. And any amendments to the database should be subjected to strict control and authorization procedures. Let us understand why selection of vendors is important. Regular infusion of new potential vendors into the procurement process is essential to encourage fresh competition. An organization may source new potential vendors through active solicitation, either for specific procurement actions or for general registration purposes. Internal auditors should seek evidence that the organization selects potential vendors on a transparent and equitable basis to maximize the scope for competition. Let us understand the concepts of technical and economic evaluations. For sealed bid tenders, technical and economic evaluations underpin competitive integrity, representing crucial steps in the procurement process. Technical evaluations involve an assessment of whether the specifications of a good or service offered by a potential vendor meet the organization's requirements. Only submissions from potential vendors that pass the hurdle of technical acceptability should proceed to an economic evaluation. Vendor selection, therefore, is normally made on the basis of the economic evaluation of the best value for money offered by technically acceptable offers. The economic evaluation focuses on the costs proposed by potential vendors alongside any other relevant costs and any compelling non-financial considerations. In practice, procurement functions often find that there are degrees of technical acceptability. Moreover, organizations commonly use systems of weighted scores that intermingle technical and economic aspects. For example, an organization that wishes to stress quality over cost for a procurement action may apply a weighting of 70% to the technical evaluation and 30% to the economic evaluation. Auditors should be aware of the way in which scoring methods can influence the outcome of a procurement action and how this area may be open to manipulation. For complex procurement actions, especially in the field of emerging technologies, potential vendors may be asked to contribute to the development of technical specifications. Technical negotiations between the organization and potential vendors complicate procurement transparency, and the auditor should assess that safeguards are in place to encourage fair and competitive negotiations. Let us understand the importance of transparency and fairness in procurement. Although procurement processes comprise a range of fundamental procedures and internal controls beyond the scope covered here, the fundamental idea that remains key to this important activity. Internal auditors must be sensitive to procedures and controls designed to encourage transparency and fairness and thereby safeguard the competitive elements of procurement. Let us have a look at purchasing documents. A purchasing document is an instrument used by purchasing to procure materials or services. The following list shows the various external purchasing documents available in the standard SAP system. Note: purchase requisitions are not included on this list because they are usually regarded as internal documents used within purchasing and are therefore treated separately. Let us begin with request for quotation, that is RFQ. Request for quotation RFQ transmits a requirement defined in a requisition for a material or service to potential vendors. Quotation contains a vendor's prices and conditions and is the basis for vendor selection. Purchase order PO. The buying entity's request or instruction to a vendor, that is external supplier, to supply certain materials or render or perform certain services or works, formalizing a purchase transaction. Contract. In the SAP purchasing component, a type of outline agreement or longer-term buying arrangement. The contract is a binding commitment to procure a certain material or service from a vendor over a certain period of time. Scheduling agreement. Another type of outline agreement or longer-term buying arrangement. Scheduling agreements provide for the creation of delivery schedules specifying purchase quantities, delivery dates, and possibly also precise times of delivery over a predefined period. Now we will study about requests for proposals or RFP. Document used in procurement procedures through which a purchaser advises the potential suppliers of statement and scope of work, specifications, schedules or timelines, contract type, data requirements, terms and conditions, description of goods and or services to be procured, general criteria used in evaluation procedure, special contractual requirements, technical goals, instructions for preparation of technical management and or proposals. RFPs are publicly advertised and suppliers respond with a detailed proposal, not with only a price quotation. Let us study the documentation required for tenders. Pre-qualification site visits, approved vendor lists, self-performance and vertical integration versus subcontracting, price versus cost, setting specifications, input versus output specifications, requests for purchase that is RFP, document and process, tender question and answer, evaluation, negotiation, finalization and client approval, implementation, contract finalization. Please take a moment to review tender documentation and RFP process. RFP general contents. Please take a moment to review tender documentation and RFP process. Tender evaluation, evaluation scoring criteria. Please take a moment to review tender documentation and RFP process. Tender evaluation matrix. Let us now understand how to evaluate vendors based on vendor presentations. Presentation of proposal. Understanding of service or product to be delivered, that is SLAs and KPIs. Vendor proposed organization and key staff. Percent of time on assignment. Methodology. Who, what, how, where, when, why. Quality and safety systems. Men or women and materials. Implementation or transition plan. Changing vendors, parallel running with outgoing vendor. Continuous improvement activities. How will the vendor work with us proactively? Team meetings. Let's have an overview on evaluating vendors through recommendations and awards. Recommendation, negotiation, and award. Recommend to client with supporting information, that is template. Don't advise unsuccessful bidders until after successful vendor has been through negotiations and award. Negotiations, client input, never negotiate on your own. Negotiations, understand cost constraints and trade-offs. Letter of award, purchase order, letter of intent and contract, contract abstract on Delphi. Letters to unsuccessful bidders. All documents filed for audit and future reference. Let us study about vendor management. Vendor management code of ethics. Ethics. Those character traits that guide our decision-making process through right and wrong. They can sometimes work against capabilities and or opportunities. It might be completely legal, possible, justified, or advantageous. But is it right? There's no such thing as a free lunch. Let us discuss the importance of reporting in purchasing operations. Those with ultimate responsibility for purchasing operations within an enterprise frequently need to obtain an overview of their vendors and purchasing organizations. Among other things, they have to know which purchase orders were issued to a certain vendor during a given period, for how many purchase orders goods have already been received, whether a vendor delivered ordered materials in full or only in part, which vendors did or did not adhere to their delivery dates, whether goods received from vendors conform to requirements and invoices submitted are correct, the average value of purchase orders issued by a given purchasing organization or purchasing group. The reports and analysis available in the SAP system provide this overview in a fast and straightforward manner, allowing senior executives to react appropriately to given situations. Let us understand what is the impact of procurement on business. For any business to run, it is important that all material and services required are made available for the business activities. Facilities management is no different. It is important that all requisite services and supply contracts are in place for the operations to be undertaken efficiently and effectively. This includes the contracts for services like mailroom, housekeeping, M&E, etc., contracts for AMCs, and contracts for consumables and other supplies. The procurement function also ensures that the spend on the services and supplies is in line with the market costs and the business does not spend more than what is required. That brings us to the end of this module on procurement. In this module, you learned about procurement is the management of non-pay expenditure to ensure the best value for money. Difference between procurement, purchasing and buying. Procurement management process. Types of procurement. Competition and frauds related to procurement. Importance of vendor selection. Vendor management. Tender documentation. RFP process. Importance of reporting and purchasing. Impact of procurement on business.